Hello, this is Japanese Economic Review Channel. Welcome to the Japan Macro Diagnostic Report for February 2026. Today we'll review the revised indexes of business conditions released by the Cabinet Office. We will unpack the data to reveal the underlying dynamics of Japan's macroeconomy. The official baseline assessment remains that the economy has, quote, stopped falling. While the coincident index shows a month-over-month drop of 1.8 points, the leading index surged by 1.3 points to 113.3. This upward revision anchors an optimistic view. Let's look at the economic cycle. Current production and retail metrics have dipped into the trough, indicating a temporary slowdown. However, aggressive forward-looking B2B investments signal an imminent cyclical pivot. We are currently at a turning point. Focusing on the present coincident index, we see a dip to 116.3. Although February saw a drop of 1.8 points due to a reaction to January's surge, both the 3-month and 7-month trailing averages maintain positive momentum, preventing a macroeconomic downgrade. What dragged down the present index? Industrial contraction is the main drag. Decreased shipments in producer goods, minus 0.57 PTS, and investment goods, minus 0.56 PTS, suppressed the baseline. However, durable consumer goods, plus 0.22 PTS, positively contributed. The leading index, signaling our future, paints a highly positive picture. It jumped to 113.3, a 1.3-point increase, the highest leap across all three indices. This strong trajectory provides foundational evidence that the current trough is strictly temporary. The 1.3-point surge is a B2B investment shock. It is overwhelmingly powered by a staggering 30.3% explosion in real machinery orders, adding 0.85 points. Combined with consumer confidence, plus 0.79 PTS, this offsets negative factors like dropped job offers. The lagging index, which confirms past trends, rose by 0.3 points to 113.1. This highlights structural strengths. Corporate tax receipts, plus 0.22 PTS, and regular cash earnings, plus 0.31 PTS, provide a stable floor beneath the coincident dip, proving underlying robustness. February 2026 shows a macro tug-of-war. Immediate industrial shipments and production are contracting, pulling the present index down. Conversely, forward-looking capital expenditure commitments, like machinery orders, are wildly accelerating towards future optimism. Why did the leading index improve so much? The preliminary release understated economic momentum. Incorporating finalized data, specifically 492.6 billion yen in real machinery orders, fundamentally altered the trajectory, revising the index up to 113.3. Why stopped falling? The sharp contraction in shipments isn't a recession signal, but a clearing phase. The plus 30.3% surge in machinery orders proves corporations are looking past inventory corrections and aggressively committing capital to future capacity. Looking ahead to the next release on May 12, 2026, we have two watchlist items. First, will coincident production rebound to meet leading machinery orders? Second, will the consumer confidence rally translate into tangible retail recovery? Thank you for your attention. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.